Good morning and welcome to the Cleantech Lithium PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions and press send. Before we begin, I would like to submit the following poll, and I would now like to hand you over to Daniel Fox-Davies. Good morning to you.
Morning, and once again, thank you very much for arranging and all your help from the company. Steve, good morning.
Hi, Dan.
We are actually both, so my apologies, I am technically on holiday this week, so Steve and I are both in the same country for the first time in a while. I'm actually down in Spain and out of a hotel room, so I apologise for the less than salubrious backdrop. But Steve, good morning. So obviously we've put out an announcement this morning about the retail offer. Following on from the institutional raise that we announced on Friday. We've had a number of comments about that, people asking for clarification on just whys and the wherefores, and how we're doing on a couple of things. So we thought it would be good, and we appreciate, we usually do this at the end of the day, but due to traveling commitments, we thought we'd get this out early and then people could sort of come back in and we'll post this out on the various channels so people can watch it later. But I suppose, Steve, the first one is people are keen to sort of understand the rationale and the reasoning for around the institutional raise. Maybe if you want to address that first, then I'll jump in with a couple of things about who took part, etc.
Sure. There's two main reasons that we wanted to push ahead. Obviously, we put out into the market that we've been awarded the sale by the government. It's in its final ratification. At the moment, we completed the PFS, and from the PFS, there were a number of areas of optimization that we want to look at. It became very clear when we're looking at the timeline into production that the critical path is on the environmental permitting. And part of that is we need to do 1 year, 4 quarters of environmental baseline studies before we can complete the EIA. So that is really key that we get on with that. On the ASX, we've been talking about for some time in discussion with the ASX. They have a minimum liquidity requirement. So in order to meet that liquidity requirement for the ASX, which is 12 months of funding, and to get on with the EIA work, and to do additional processing test work, I think everybody knows that we've been working with the Chinese company, Lanshen, over the course of the last 2 years in our PFS. But there's been a number of companies, both in the United States and the EU, who really got into lithium in terms of both developing non-Chinese adsorbents and also in design of DLE columns and downstream. So we want to take the advantage of looking at those other processes in parallel with the Lanshan work that we've been doing. So we need the cash to do that and to support the working capital. And now's the time to go and start doing that work. We are engaged with strategic partners, a very good momentum. We can talk a bit about that. But the reality is that financing coming from those strategic partners will only be later in the year. And we really need to get on and do the work now. That's why we've done this capital raise.
Because actually, I think it might be useful for a lot of people. Obviously, a number of parties will be disappointed that we weren't able to raise at a higher price. So if I may, Steve, I'll just take a step just to recap and take us back. As parties are aware, obviously, we were delayed for initially getting the sale. We were delighted that we got the sale this year. And what I think is quite useful, I'm just going to repeat some of the things we talked to with some of the institutional investors. As part of that, as Steve just mentioned, we put up the PFS. There was a number of areas for optimization. The scoping study had it 20,000 tons a year. The PFS came back at 15 on the basis that some of the technical consultants feel that we need to do further work. It's not that we can't support 20,000 tons a year, but we can only support the data at the moment on 15,000. So that's one of the things that will be looked at next year. And I'll come on to how that impacts around the financial model and pricing and valuation. But if we go back 2 years ago, why are we going to the ASX? We'll come on to that later in terms of the numbers there. But we had made a commitment to Regal, our largest shareholder, who were at about 16, 17. They'll now be about 20% approximately after this raise, that we would look to go on the ASX. They funded the company from the pre-IPO when they initially put in £1 million. They supported the IPO and they've supported every round since. And as we'll come to in a slide in a couple of minutes, they feel that the ASX or the Australian market has a much deeper and broader understanding of lithium, much deeper liquidity pools. It's just been a much better market than London. So we looked to do that about 2 years ago. And the ASX, at that point in time, we had a option over the licenses. The ASX is adverse to companies that have options and wanted us to do a deal to acquire the licenses 100%, which we did and entered in these commitments for these payments. In order to fund that, we'd had an investor and we RNS that had said that they were willing to put up a convertible loan note. We went forward and started negotiations. They were unable to come up with the money. At that point in time, we'd had the prospectus published, the financials were audited, it was locked down, we were just starting to commence the process of marketing. And so Regal had offered to help fund that, but we couldn't do that as equity because of the prospectus. It would have put everything back and then the financials would have become stale. So they put up the majority of a convertible loan note in the summer of 2024. The ASX marketing went very well. We ran into a regulatory hurdle between London and the ASX, which meant that we had to withdraw and come back and do that raise at the end of 2024 in anticipation of getting the sale. And at that point in time, the feedback from all the brokers in Australia was it was far better because we were expecting the sale to be imminent and the PFS to be imminent, that we came back to the market once we had that. So that's what sort of delayed it through 2025. A couple of people have commented about the pricing on the convertible loan note conversions. So they had the right, when they extended last year, obviously they were only hoping to come in for a short bridge ahead of the ASX. They extended out to the end of June and they had the right to convert at the last placing price. Now, in order to, I think, get the best possible reception, it was felt that we needed to clean up the balance sheet. We didn't want to be extending on the loan notes. It's far better for us to convert rather than try and take it out of the public market. And not only did the ASX want to make sure that we had 12 months working capital, but the loan note holders, in order to condition of converting, they also wanted to see that the company was fully financed for at least the next sort of 12, 14 months in order for giving up their position as debt holders and coming in as equity holders. So as a part of that, Regal will now be just around about 20% of the company. On the institutional raise, Athos is maintaining their position, so they'll still be at about 22% of the company. They really feel that we've got the potential to significantly re-rate over the next 6 to 12 months coming to the ASX. We've had a number of UK institutional funds that have come aboard, and the vast majority, the rest of it was existing long-term shareholders who supported the company in every round from either the pre-IPO or the IPO. We have had a couple of additions to come onto the register. We've had a couple of parties in Australia who were active in the lithium space, who were keen to get involved with the company ahead of getting onto the ASX. But we were aware that we were unable to obviously go out to all of the retail. And we have a lot of retail shareholders who've been very supportive of the company over the last 4 years. So we undertook the retail offering. We went with wins this time. Although we were going out for an initially about 250 to 300,000, the book came in at just over 600. Of that comprises of approximately 250 different parties and individuals investing. About 80% of that are existing shareholders with a position already. About 20% are new shareholders, although they make up around about 10 to 12% of the overall capital raised. And the way these platforms work is we can't scale back, we can't differentiate between an existing shareholder and a new shareholder. You can either just scale back Hargreaves or AJ Bell or somebody by 10 or 15%. So having listened to a number of the comments and a lot of the smaller shareholders saying that we want to maintain our position or maintain our standing, or we want to have the same opportunity afforded to us, that was why the decision was to increase that and take that funding in full at the 600,000. So that was the announcement that went out this morning. So what does that do for us now? As Steve said, we'll start the environmental process. I think, Steve, do you just want to, and that was the loan note conversion. So we now have a clean balance sheet. We're fully funded for well over the next year. And it allows us to then move forward onto the ASX, which we do. Steve, while we're here, do you just want to mention on Leo joining the board?
Yeah, sure. Leo Coote has been a shareholder in the company since the early days. He's been very keen on what we're doing in Chile. When the loan notes were put in place, he was asked by the loan note holders to represent them as an observer on the board, not as a director, but as an observer. He's got tremendous background in natural resources and development of large capital projects. Has been very successful, particularly in the oil and gas industry. We found his contribution to discussions very good. And on completion of the conversion of the loan notes, we are asking Leo to come on board as an independent non-executive director and contribute to the discussions on the board. So that will happen in the course of the next week.
Yeah, I have to say, he's I enjoyed working with him and his input very much over the last sort of year and a bit. He's a very solid and robust individual. So I'm going to go down to the questions. We'll answer some of them there. But do you just want to refresh and go back on Cutfield when they were appointed and how we couldn't really start the process until we had the sale and the PFS, Steve, and then.
Sure. Yeah. We've had for the last couple of years a number of parties interested in Cleantech Lithium, but the reality is the world of lithium has expanded greatly in not just in China, South Korea, North America, Europe. So we believe that the best way to select what we think is going to be the best partner for Cleantech Lithium going forward is to engage a very experienced firm, Cutfield Freeman, a boutique firm out of London, financial advisors. I've worked with them for many years in the past. They truly are very, very professional. We've worked with them to produce initially a teaser information memorandum. They've been in contact worldwide with all potential parties. And we've already got, I think, 14 parties in the data room that we've set up. We have Ignacio is in Asia at the moment with a member of the Cutfield Freeman team visiting in China and South Korea. And these are to parties that have been identified as serious potential strategic partners by Cutfield Freeman. They're already in the data room. The discussions Ignacio has been having with them have been very, very deep, both technical, legal, and deal structure. So I think Ignacio is very pleased with the momentum. He's got 10 meetings, I think 8 in China and 2 in South Korea on this trip. He then comes back. Then it's going to be around in North America. He's attending fast markets. He's been lining up a number of meetings with through Cutfield Freeman with potential parties in the United States as well. So the process is going. The reality is it's going to take time. Now, we may be in a position to have selected 1 or 2 partners in not too much time, but the reality to go through all the due diligence which the party has to do, because it's not just an ask to come in to provide the financing through to final investment decision. It's also looking at their participation in the construction finance in the future. So they'll be doing thorough due diligence, legal, technical, financial. It's discussions on the terms of the deal, offtake agreements, financing agreements, and this will all take time. So the reality is closing could be towards the end of the year. But momentum is very, very good.
Steve, I'm jumping. So we previously flagged CATL approached us more than, I think, 3 years ago initially, Steve, and they've been down to site. I think actually, Steve, I think it's 9 in China and 3 in Korea I think is what
Okay.
Ignacio's been saying. So I think he's in 5 different cities in China at the moment. Then he heads down to Korea. So Cutfield have reached out to a range of companies throughout the lithium value chain. So that includes some of the world's leading battery manufacturers, cathode manufacturers, commodity trading houses, global mining companies that'll be household names that wish to expand into the lithium space, other large lithium producers that are looking at how they can expand their supply, including companies in Latin America that might be in the brine field in evaporation, but wish to then move looking into DLE. So we couldn't, Cutfield had started conversation, I think, well over a year ago. But again, we were sadly delayed on the sale, which I think the market continues to really not understand or appreciate how significant that was. It is the first sale granted in Chile ever to a junior or an independent mining company. And it brings with it a huge amount of value to the assets and all the work that Steve and the team have done over the last 4 years. So Ignacio will be in Asia through this week. Then he's back. Then he'll be out in fast markets. There are a number of other conversations happening with parties. We can talk in a second about how a deal may or may not look like, what the company would like, what you've got there. But the company has a very, very real asset. We have now 2 million tons. We have a PFS that supports us at 15,000 tons a year. While the work needs to be done, personally, the general consensus is we can take that back up to 20,000 tons, which doesn't just increase it by about a 33%, but because you have the fixed capital cost, it adds more like about 45 to 50% when we model it to the NPV and the value of the company. And again, I think one of the things we should focus on, this is just the Laguna Verde asset. So if you go back to the very beginning, the company had 2 primary assets, and our target was to get to 2 million tons on both assets, looking to develop 20,000 tons per asset. We're at about just under 1 million on our second primary asset. We're at 2 million, or just under 2 million on the first asset on Laguna Verde at 15,000. But the numbers we're looking at is all around Laguna Verde. We still have a lot of potential on the second asset. Then we also have our third asset. And there are other opportunities that are being presented to the company all the time. So those processes will go on. Ignacio is hopeful that we would have a strategic partner in by year end. As Steve said, some of these times these things take a little bit longer, and what the funding allows the company to be fully secure now for the next well over a year, to allow it to meet its objectives and start on things like the environmental impact study, which is 4 quarters, I think it is, you said, Steve. So that can all go in hand how we're bringing the strategic partner. Is there anything else, Steve, that I there or I misspoke on anything?
No. I think the momentum is there. We just will be getting into parallel negotiations with a number of parties.
Okay, I'm going to try and collate some of the questions as we do, but there is one about the note. I wanted to explain just a little bit more about the note and the numbers that we put out and that Canaccord put out. Steve, do you want to address this, or I could jump in and talk about the valuation numbers?
Yeah, just the first thing. We did the PFS based on the resource that we had, and when you do a pre-feasibility study or a feasibility study, you can only use the measured and indicated resource, not the indicated. And out of the 1.9 million tons, we have 0.8 million measured and indicated, and it's only from that you can use to develop the reserves in the hydrogeological model. So it's because of that limitation we could only do the PFS at 15,000. The aim is to do more drilling, and particularly now that we've acquired the Minergy licenses, that's expanded the Sayal area. With more drilling, we can both expand the total resource, but in particular the measured and indicated, which should allow us, if we can demonstrate with a hydrogeological modeling, that we can produce at a higher production rate than 15,000. So that's all part of the pre-DFS studies that we intend to do once we have financing from a strategic partner.
So this chart simply shows a breakdown of the cost percentage of revenues, but the main one here is we ran it at 22,500 long term, spot today, Steve? I hadn't had a look. Have you had a look?
Yeah, just over 23,000.
So we're at 23. So it bounced up to 28. So you got a slight increase over the spot price. We were up at 28 about 2 weeks ago. Now, historically, lithium tends to be weaker in the first and second quarters. It tends to be stronger in the third and fourth quarters. There still is a consensus for the lithium price to increase over the next couple of years. But when we put out our note is based on a straight discounted cash flow model based on the 15,000 on the numbers that we have using an MPV 8. Usually we'd go for an MPV 10, but all the peers are around an MPV 8. And it's probably more realistic as a cost of capital in Chile long term. And then we've taken a 92.5% discount from that, and we put in all the risk factors. Now, if you do further drilling and you increase the resource, or you do some further drilling just to move from the measured, some of the resource more into the measured indicator category, and we get a support that we can get up to 20,000, that changes the price target. The increase on the lithium price would raise the price target, and the bulk of our pricing is purely around Laguna Verde. So people asking about the pricing, we have to come up with a number. When you're pre-revenue, you're really just doing it off financial models and doing some peer group analysis in terms of EV to resources in the ground, of which we remain very cheap. And it was a 12-month forecast of where we thought the company could be. And we still believe that that's the potential of where we could be in 12 months. Part of that process is also getting onto the ASX. But our model was based on, it was a fully diluted number of all the shares and warrants at the time. That will come down slightly from this raise, and then it was likely to go up significantly on a re-rating or bringing in a partner. And then it would look to increase significantly as we could get back to 20,000 or add further resources to the company. But that's where the numbers come from, and it just comes out of the modeling. Mark Hayhoe did that work for us. Mark and I have worked together for a number of years. He's a geologist with a master's in geostats and a PhD, I think, originally in sedimentary. He's a resource geologist, and he's also one of the administrators for the Masters in Mining Finance at Imperial College. So it's a very robust model, but where the market is and where price targets are can be a disconnect for a period of time until you get through the main hurdles. And what we think is the main hurdle is going to be bringing in a strategic partner. And to that end, as Steve was saying, the companies that we're seeing are among the leading participants in the market globally. And there has been a significant amount of interest. What I take a great deal of comfort is that Cutfield have been very encouraged by the amount of interest that the company has had, the amount of companies that are in NDA, and the amount of companies that would have asked to see Ignacio and get into the data room. And they wouldn't do that unless they thought that we had a valuable asset which could be revenue enhancing to them and which they want to partner with. Steve, anything else just here on this slide?
Nope.
Okay. Right. Steve, do you want to lead off on the ASX?
Well, on the ASX, it's been very clear. It is a natural resources market. I mean, there are many natural resource funds. There's many institutions where investing in natural resources is the key part of their fund. Our main shareholder, Regal, has been strongly saying we should be there. There's many other lithium companies. In fact, I was looking, there's 9 brine projects and 22 hard rock projects now, which are listed on the ASX. There's a much deeper pool of capital. Everybody in Australia has a superannuation fund, and they're all investing in the natural resources space. There are many institutions that like our brine story, but they say, we can't invest in you because you're not on the ASX. If you're on the ASX, then we can invest. So that's what we intend to do. This slide just shows Cleantech Lithium is at the bottom in terms of valuation compared to all of our other brine projects. So we've got a lot of room to move upwards. So going back onto the ASX, we are in the process. We have our legal advisors engaged. We've already had discussions with the sustainability committee of the ASX. We've explained that we've now got the sale through ratification. We've cleaned up the balance sheet, and we see there's no obstacles to listing, provided we can demonstrate we have the liquidity to get onto the ASX. The process now is a lot of documentation is required. We need to update the prospectus. A lot has happened since our previous attempt to list on the ASX. We need to update all the legal issues with the sale, the financials, of course, land tenure. We've acquired the Minergy licenses. We've completed a lot of technical work with the PFS and hydrogeological modeling. All of that needs to go into detailed reports. So our expectation is to put in the prospectus in August, and by the time we go through the entire process, end of Q3, we would expect to be listed on the ASX. We're very pleased to have appointed Todd Ross as our, one of the requirements is to have an Australian resident director. We've appointed Todd Ross, I've known for a while. He's actually undertaken, he's been a CEO undertaking an IPO of a mining company on the ASX in the past. His background is investment banking. He was one of the earliest bankers to provide debt finance for lithium projects in Australia. So he understands the lithium space. He's lives in Perth, good contacts with the brokers and the institutions.
So just, if I may, Steve, just jump in there. So when we go through an ASX process, you approach the ASX for an initial informal sort of principle. So we've been having conversations. We started about 2 months ago, just reviewing of everything that needed to happen. Obviously, there's going to be an update to all the licenses, as Steve just said, with Minergy and the PFS. The key thing is you have to have your audited financials. They are due fairly imminently. They need to be within a window. So our target is to be on the ASX in September. We would look to bring that forward if we can, but there is a number of review periods, both with the ASX and with ASX and some finalization. So obviously with the raise last week and with the retail funding this morning, that changes the capital structure of the company. So we need to update all of that information and put that in. There's a bunch of other process and procedures that needs to happen. Ignacio and I are planning to be down in Perth and Sydney the week of the 16th of July. He's got to go back. He's got the fast markets. So we're re-meeting with a number of the other brokers down there. I'll talk to you a little bit more about in just 1 second about what needs to happen on the raise. And then we're also meeting with Regal as one of our largest shareholders in Sydney, who said that they are supportive of the company and supportive of that. And they're not really sort of known over here, but they are the 800-pound gorilla in the room in Australia. They recently, Galan, which is one of the peer group, which is a DLE play in Argentina, they went out a couple of months ago looking to raise 20 million. They had a book of 100 million. They ended up closing on 40, but Regal was the largest subscriber into that. And they are invested into a number of other, well, they're the largest resource player in Australia at this point in time. So in terms of people who asked some of the questions here, and I'll try and dress them off. One of the requirements is, the headline number is you need to have 300 shareholders with $2,000 Australian, approximately £1,000 each to be admitted, as well as your minimum capital requirement. There are firms that help do that for you. It's called the spread. So usually a number of brokers will come along and they'll bring you 50 names. They have managed accounts that agree to do this. We've spoken to a number, and we've got a couple of people on the register now who'd be assisting on that. Now, somebody also mentioned about the share price. We were bouncing at about 8.5. There has been some question about the discount. One of the problems we had on this race, once you start the process and you walk across, last week there were 19 other companies in the UK either looking to IPO, RTO, or do a placing on the market. A number of those are still open at the moment, but that was the feedback that I had from a number of funds. So sadly, it's not just when you're fundraising around the company and your value, you're also competing across a broad base of other AIM companies and another base of resource companies. and there's a limited amount of capital in the UK. So that's one of the problems that we were facing. It's all about timing. But with the ASX, we will adjust that spread. I think we will be able to now undertake a number of marketing activities that we couldn't do over the last 2-3 months because there was some discussion around a potential raise. Will I be able to do a lot of marketing on the back of Ignacio coming back from his trip? We can give a lot more confidence around where those parties are. And I could see us getting back up to the 8, 9, 10 pence quite quickly. We've got a number of parties now on the register who have committed to supporting the share price between now and the ASX. So I don't think that's going to be that much of an issue. And I think there's been a lot of parties that were aware that we would probably have to do a funding over the summer. So having now got that out the way and knowing that the company is now fully funded for the next year and a bit, I think we'll be able to see a solid recovery in the share price. Just addressing one of the questions here about the share price numbers in. I'll go through all the questions properly, Steve, but do you want to talk about the creation curve, and then we'll run through some of the other questions?
Yeah. We need to get on with our critical path activity, which is the EIA. In terms of the sale, there is a requirement to put in place a governance committee between the company and the indigenous communities. We need to set that up. We said right at the beginning we will involve them in the EIA process, so that's immediate. The ASX, we've talked for a number of years. Now we're going to get it done. We're financially in a position to do that. We've got the sale. There's no issues with the ASX to completing that. We're well underway with the strategic partner process. We've identified the work that we need to do for the DFS. When we have additional funding from the strategic partner, we can undertake that drilling work that we need to do. So we're on the way. I think over the course of the next year, we'll make very, very good progress towards the completion of the DFS, the EIA, and then get into the financing for the project.
Okay, let's run through these questions. So we'll try and put some of them together. So pre-submitted, so that's right, it doesn't say who. We now have 100% of the sale. We have 97.7, but we have 100% of the sale. Steve, we've got a question here about drilling to increase the reserves. Obviously, you'd mentioned earlier that we'd look to do in conjunction with a strategic partner. Is that correct?
Yeah. Yes. Yeah. No. Drilling is quite expensive. We want to do quite a bit more drilling, both to extend the reserves, move them into M&I, but we also need to do the drilling work for the re-injection, as that's important for the hydrogeological modeling. The reality is we really do need to get additional finance from the strategic partner before we can start that work.
So realistically, that's something for next year as part of the DFS.
Well, we would hope to be able to start that towards the end of the year. No, clearly we have the opposite seasons. It's winter season now. We can't do anything, but it's summer from November through to April. So hopefully we'll have some funding to do the work then.
Okay, thanks. So, right. Question about the civil and criminal complaints against the company over the outstanding payment to some of the Laguna Verde vendors.
Yeah. This has been ongoing. We've had ongoing discussions with the vendors. There's been a change. Clearly the sale makes a big difference. After consultation with the indigenous communities, the government removed the Laguna from the sale, and that's the majority of the license areas of the LV vendors. We are in discussion with them. We want to resolve this issue in an equitable way for both parties. So far, the discussions have been positive, and we hope to get there soon.
But just for clarification, the LV vendors license area does not form part of the application or the area that was granted for the sale.
Correct. The government awards the sale. We had to demonstrate we had 80% of the license area of the sale, and we demonstrated that with our own licenses and the Minergy licenses, and we did not use the LV licenses as part of the sale application. But once we've got the sale applies to the entire area, and it is completely separate from the mining license position. It's the sale that gives us the permission to exploit lithium, not the mining license.
Thank you. So again, guys, just to be clear about this, originally when we were talking about 4.5 years ago, I mean, I remember having conversations with you, Steve, and with Jason. I mean, one of the things was we wanted to put a pontoon into the middle and drill some holes in the middle, but then the government said it's an area of outstanding beauty and it's very nice and you can't do that. And then obviously they've come back, and after consultation, as you said, we can't drill there. But my understanding for talking to Daxios is the Laguna Verde vendors are very good people. We entered into there. We're hoping to resolve it on an amicable way. And I think Ignacio will be focusing on that now that this once he gets back from his current trip into Asia, there's only obviously so many hours and time zones and things. So we should be able to update on that in the coming days and weeks ahead. Steve M was just asking about the industry response. Steve, I think we've covered that. Cutfield really couldn't do their part of the job until we'd had the PFS, but they got to work shortly after we published it. We've had a huge amount of response. There's a number of people in the data rooms, and the follow-on from that is Ignacio's in China, heading to Korea as we speak, talking with some of the world's largest companies in the EV value chain. James, the 10.5 we've just addressed earlier, but I think now that we know that the funding's in place on the back of the activities of what he's doing, we need to go out and market, basically. There's a number of parties I think are very interested in the company. We'll be doing a bit more work in terms of roadshows and investor relations and outreach and just demonstrating the value, not only in the UK, but also into Europe. We still have the German listing, which we really haven't focused on. And we could do some more promotion to the German market. And we'll be doing some pre-marketing in Australia. And I think the Australian market will see the value. And once you get the sort of the implicit approval, nothing's ever written down, but they'll ask you whether you've had the approval in principle, then I think a number of parties in Australia will look to get more active. And we have several Australian investors that have come on as part of this raise. But that, I think we could move up. We're fairly thinly traded in the UK, and it wouldn't take very much to get the company back up over the 10.5%. That's the same question coming in from Paul M. I hope it's addressed there. Steve, the sale ratification from the Controller's Office. Can we update everybody on how that's going?
Yeah, the sale process, the sale and the economic terms and the outline of the polygon all been determined by the Ministry of Mining, after the consultation with the indigenous people. That's been put into a contract with us. We're happy with that. Then the process is Mining Ministry has that put into the Controller's Office. Every contract of any sort with the government has to go through the Controller's Office to ensure it meets the constitutional and legal requirements of Chile. The Mining Ministry has done that. They put the contract through. They has a number of observations, from the controller, where the documentation wasn't quite complete. The ministry has revised all of that in agreement with the controller, and it's an ongoing process. It's an administration process to get to the point which we hope is during the course of the next month, that there is a decree which is developed for signing by the President of Chile, President Cast and Ignacio, very, very soon. All the discussions we've had with the Ministry of Mining, Ministry of Economics, they're very, very supportive of Cleantech Lithium. They really do want to see the lithium industry advance with private sector involvement. And we are very, very confident that the process will complete shortly.
Thank you. Steve, actually, an interesting one here from Steve M again. It's talking about Chinese partners or potentially Korean partners. And again, I would stress we've mentioned that then Ignacio is going to the States and we are talking to potentially his partners. But how would having a Chinese, or would a Chinese partner affect the free trade position that Chile has with the US market?
We don't think so. No, there are already Chinese investments in the United States. The US wants lithium and other strategic minerals to go in from either within the United States or free trade countries like Chile. The reality is that the world is really dividing in two in terms of financing. There are projects with Chinese involvement, either equity interests and technology, which is coming in. Clearly, there's Asian financing available. It's also clear that out of the United States, there's deep pools of financing which is available, but only available to companies using US or European technology. And that's part of the work we want to do, post PFS, is look at some of these alternative technology providers, because we want to be in a position to choose which is going to be the best alternative for us if there is any sort of geopolitical concerns of using Chinese technology or Chinese equity and wanting to sell material into the United States. So yeah, geopolitics is an issue, but we're making sure we're covered in both areas.
Thank you. We've got one tip for John about the share price. You want to see, I'll jump in. So John was saying on the way down, in terms of the share price, the lithium price was given as the reason. I think, John, it was one of the reasons. Oh, well, it's question since then the lithium price has gone up 3.5 times, but the share price continues to fall. So, John, the whole sector, we did very well to ride the lithium curve, and then all companies came off on the back of it. We had a number of things that affected us. Partly the delay in the ASX, which led to, I think, a bit of a lack of confidence. We understand why. But obviously, we were hoping for the sale in early 2025. When we didn't get that, that hit our share price significantly. And Steve and the team had put a huge amount of work into the PFS, but the company didn't want to publish the PFS without having been awarded the sale. Then we had to go back through that process. And then with the acquisition of the Minergy licenses, we then had to update the PFS. So I think that was a lot of the problems that we had through 2025. On the back of the sale and the publication of the PFS, we did actually get up to an intraday high of 17. We closed on 13. Sandy, one of the investors that approached us on the funding last year was Metals One. So they took a million of the 5 million. So they were effectively 10% of the company post raise. And then having seen the share price increase by effectively the best part of 200+% for them, they exited the company. They are an investment vehicle. They had a number of other projects that they were looking to fund. They had a smaller project where they thought they could equally make a 2 to 3 times uplift. We are disappointed that they did it in a relatively brutal manner, for want of a better word, in that they just called up 2 market makers and dumped their position. They saw an opportunity. They're there to make money, but it's been difficult for all of us as the rest of the shareholders. So one of the market makers, I think, just crossed out most of their position. We went to 13. The other market maker, most market makers don't have a huge balance sheet. Market making books tend to be a couple of million quid at a firm. So if you have one market maker ending up with £1 million on a position, they don't have the ability to run that very long. So they end up having to unwind it into the market, and that's affected the share price. And then if you look at some of the chat rooms, there was speculation around the funding. But we're hopeful that now that we are financed, now that we're into this process of a partner, now that the environment for lithium continues to be strong, it's really onus is on partly the company, but also on me to get out and go and market the story. We're now free to go and talk to a lot more people now that these financings are closed. But we really feel that the market doesn't appreciate the significance of the sale or the value of the assets we have. And that's really the challenge that we have over the next 6 to 12 months. Do you want to say anything else you want to add to that, Steve?
No, I think that's a fair summary.
John was also asking the message. John, I'm also a long-term shareholder. I mean, a number of people have been very successful in making money along the way. RAB Capital's come back into this round. They invested the pre-IPO, the IPO. They held the position for about a year and a bit. When lithium prices were high, they exited. We have other investors that have traded in and out throughout the company's history. For everybody that is selling, somebody else is buying it at that given point in time. So for the long-term shareholders, of which I am one, I think we've mentioned in previous presentations, I've invested in every round since the pre-IPO, and a great many friends and family, is that I remain bullish about the overall long-term outlook for lithium, and for the EV industry and for the battery industry. Ignacio talks in our presentations that we do together that he feels that there's still considerable overestimation of what supply can come on and how quickly, and an underestimation of the demand, particularly around everything that's going into AI and the data centers and the battery requirements there. He says it really isn't being factored in. In his opinion, he's a much better and more knowledgeable individual than I am. So we remain bullish on lithium. We have a really solid world-class asset at just under 2 million tons. We want to move that more into the measured and indicated categories. We have a robust PFS that supports 15,000 tons a year. We are now in the process of talking to a number of strategic partners, and we believe that we can actually get the company back to a point where we should be able to all make a significant return on our investment. I think one of these things is it's taken longer. Obviously, if you've been investing in every round or you invested in the highs, then it is painful and we are underwater, and we appreciate that, which is why we try to keep these placings open to all the retail investors to give people an opportunity to participate. But I think the company's really achieved some significant milestones, and they will allow us to, some people have commented about the ASX or not, but I do believe that the ASX will give us a much better market for our assets and the commodities that we're in. Steve, anything else you want to add there?
No. I think no, many of us are invested right from the early days. We believe in the project and the company, and the value will return. No, that's why we have it. We just published the incentive programs for management and directors, where clearly directors are looking at a minimum price of 20p. And for Ignacio's incentives, a major part of incentive kicks in when the price gets to 50p. So those are the sort of prices we're looking at, not where we are today.
Steve, I was mentioning we talk about a 2 million resource, but 15,000 tons per annum production. Over 20 years, you're just pointing out that's 300,000 tons. He's asking whether the rest of the resource is unrecoverable, or why it's 15 versus the resource size.
Yeah, the reality is you can't pump everything out of an aquifer. There's always residual volume. There's a rule of thumb that probably from an aquifer, maybe up to 40% can be successfully extracted. But you can only put it into your studies if it comes from the measured and indicated. We had measured and indicated of 800,000. We declared pumpable reserves of 300,000 from that. So our aim is to expand the resource, expand the M&I, then we can expand the area of the well field, and then extract more. But the reality is you probably won't get more than about 40% of the resource into
Thank
production.
You. We have a very, very challenging question from Zeus. Zeus is asking, basic question: what do we see as the likely share price range should we achieve a partner and successful move to the ASX by year end? Steve, as chairman, you're limited. Shall I speculate on the rest from here?
You can speculate. I can't.
Yeah, Zeus, I mean, how long is a piece of string? There are so many things that can contribute, not least being Trump's foreign policy. I remember actually Steve and I went out for the IPO, and I had a book on the Monday of I think 12 million pounds, and on Tuesday Putin rolled into Ukraine and we lost half the book. However, if we do some back of the envelope numbers, we are trading at about 25 to 30% of our peer group average in terms of resource to EV in the ground in Australia. And I would feel that we should be at the upper end of our peer group rather than at the average. Just after we published the sale and the PFS, we were trading in the low teens. We reached an intraday high of 17. That was when Metals One sold their position and we ended up down at 13. Now, I appreciate some of the comments about we've had further share issuance and there's warrants, but actually in a lot of small cap resource companies, cash is king. The ability to meet through with your objectives when you're a non-revenue company. So that gives people a lot of confidence that you have the run rate now for the next year and we can start some of these long lead procedural issues. The EIA is not that expensive, it's just time consuming, nor is it that challenging technically or from a logistical point of view. It just needs to be done and it does cost a certain amount of money. So all of those things go forward. Now, the ASX is, we'd want to be back up at 10, 11 pence to meet the 20 cents requirement. So for those that don't know, it's a requirement of the ASX that you have a nominal value of 20 cents, irrespective of your market cap. It's just they want you to start at 20 cents. So we're going to be working hard in terms of marketing through the summer. Where the share price could go is going to be very dependent on the lithium price as well and the overall sentiment. But the big one will be the re-rating on finding a partner and then how that deal looks. There's a number of different ways that could come, and I'll invite Steve to talk in a second about what the company would like and then what is a range of options that might be available to the company. But I would hope that we would certainly be back in the mid-teens by year end. I think it's perfectly reasonable to get from today's price at 6 back to a 1 to 2x recovery from here. We were only trading at 8 and a bit beforehand. Some people have been a bit critical on the discount. Sadly, in order to get a book, the way this sort of works when you're doing institutional placing is the smaller investors want to take confidence that the larger investors are there. And the larger investors we were talking to said, look, we're happy to come in, but you're thinly traded. We're continuing to support, but we put in millions and millions and we are significantly underwater. And they're very large, big pools of capital. And the reality is that they're in a position to set the pricing. Smaller companies usually need them. And although some people are saying, look, we were marginally oversubscribed and could you have put the price slightly higher? The bulk of the book was at that price. There was a little bit higher, but you would have probably ended up with about 15 to 20%. So you end up with a clearing price, which allows you to get the momentum that you want to do. And when you're doing it, we very much hope that we're not going to be in a position to ever have to do a UK raise again. We've got the compliance listing in Australia, but if things go the way that we hope from here, this should be the last capital raise that the company needs to do before it gets to FID. And we'll talk about that in terms of the overall capital structure. So where it is, it's impossible to tell, but my own personal target is I would like to see us back at least in the mid-teens to 20 pence, and then the significant one will come with the re-rating with a partner. Steve, somebody was to talk about the other assets here. Steve M was asking, do we need a sale for each additional site in Chile?
Yes, yeah. All lithium production needs to be under a sale. Just to refresh people, we've split the project in two. We've got Laguna Verde, which we've applied for the sale, and that is with a carbonation plant in the city of Copiapó, because we had always considered our second site at Viento Andino, developing that and also using that in an expanded carbonation plant. So we've always looked at both those projects feeding into the plant in Copiapó. Once we've had the sale for Laguna Verde ratified, and we've demonstrated to the government we are really pushing ahead with the project and the EIA and working with the communities, doing more technical work, we will be in discussion with the government on a sale for Viento Andino as soon as we can.
Okay, let's run through these we got on. So a sale from there. Greg, is much management target for the upcoming ownership structure? What's your target scenario with a strategic partner?
What we've discussed so far with potential strategics and sort of deal structure is that we're open in terms of percentage. We want to have Cleantech Lithium maintaining control. We expect the incoming partner to provide the finance through to FID, which is to fund all of the EIA, DFS, drilling, technical work, and take a percentage of Laguna Verde. But when we're looking at valuation, we're looking at the valuation of the PFS. The project's got an NPV of $950 million. So we're expecting the price at which somebody comes in to be related to the NPV of the project. And whether they come in at 10, 20, 25%, we are open to that. Now, it may be that there are some parties want to come in and want to have majority ownership, because they want to have a controlling interest, and that depends on what price they are prepared to pay. So we will discuss with all parties everything from minority through to a potential offer for a majority stake. But our preference is Cleantech Lithium stays majority.
Steve, thank you for that one. So quick question, David, be about the confidence in the DLE technology, something that Ignacio's spoken with a number of institutions. We've addressed this a number of times, but do you just want to reiterate our confidence in what you've been doing, and also just for those people that weren't aware, obviously Steve's PhD is in hydrometallurgy, which is basically very consistent with DLE in the process there. But Steve, confidence levels.
Yeah, no, we've been very pleased with the work that Lanshen has done. We're very confident in the process. What we're also very confident in is the way the market has moved. You've looked at major mining companies like Rio Tinto going into the lithium space. They've put their hat on DLE. Now, they are developing the Rincon project in Argentina using DLE. They formed joint ventures with Codelco in Maricunga and Anami in Alto Andino, and they're insisting those projects are going to be DLE. You've just had in the last weeks, Albemarle and then SQM announced to the market their evaporation projects in Chile. They're also going to move to DLE. In the United States, you have Standard Lithium, their project at Smackover in the Smackover basin with Aqueduct. That's a DLE project. So there are many DLE projects. Eramet, their DLE project Centenario in Argentina is getting close to full production as a demonstration that DLE is working. Vulcan Resources in Germany is a DLE project. So the big growth in the lithium market from brines in the future, it's DLE. Now that's the way the market is going. And what's supporting that is not just the Chinese companies that are now developing the technology. You have major companies like KBR, SLB, Uridia, Saint-Gobain. They're all developing adsorbents and the downstream processing technology for DLE. So there's been a big shift in the market from 3-4 years ago when it was an emerging technology. Today it's mainstream, that if you're developing brines, you're going to be DLE.
Thank you. I mean, there's actually I'll send a link to Telegram group. There's a DLE conference, and there's a couple of good YouTube interviews with some of the world's other junior companies that go into depth about DLE, which I can refer people to. Simon M, looking to raise additional funds on the ASX. So Simon, we need to have 300 investors at a minimum parcel of 2,000. So that's 600,000 Aussie, realistically £500,000 at the minimum price. So that's a spread. There's a little syndicate of investors that we're talking to who would bring that. The company's intention is to do a compliance listing and get onto the market if the price is around the lower price. if the lithium price was to storm ahead and the share price was to be significantly higher, I don't think anyone would ever rule out taking additional funds if it was offered, but we'll be in a position to only consider that if the share price was significantly higher and it was able to be used for either further assets or to expedite work that the company wanted to do. But at this point in time, the intention is to raise what's required from a compliance listing process, which is the headline number is 300, but we may even be able to get that down to 250, given the number of shareholders that we've got. That's a discussion to be had with the ASX. And then one of the things about getting onto the ASX is, although Steve pointed out there's roughly about 40 odd companies there, there's actually well over 60 plus analysts that cover that universe. So when you look at a company like Galan or you look at Lake, there's usually half a dozen analysts. One of the things that Ignacio and I will be doing in July is seeking to meet with all of those analysts, start getting some coverage. Because if you're covering the Latin American DLE sector, you'll need to bring up coverage of Cleantech. The reality is, though, if you're an analyst sitting in Perth or Sydney, you don't cover UK listed companies, you don't put them in. The Australian market doesn't buy London companies because of time zones and various other reasons. So that's on the additional funds intent. Laurie B's mentioning Laurie, again, it's a compliance listing. We've got actually a lot of really good support. I'm quite happy we have the spread in place. There's no shortage of partners that want to come back in terms of helping. It was just the process of getting the sale and the PFS. Chris Pease put a comment about better expectations. That may well be fair criticism. We hope to do these seminars to allow to people in terms of expectations and timelines. There's a comment about allowing Metals One. People are saying, oh, we know that they were there in short term. I didn't know Metals One. The company didn't know Metals One. We hadn't dealt with them. They were introduced as a party that wanted to invest. They're a publicly listed AIM investing company into mining stocks. We had hoped they would be a longer term, but they have a right to exit if they wish to do so. So I think it's very easy to criticize in hindsight. Steve, last one for you, I think, and then we can wrap this up. Is the sale ratification holding up the strategic partner bids?
No. The contract terms are done. That's all recognised. It is just the constitutional legality which the controller has to tick off. All the people we're talking to recognise that the sale has been awarded by the ministry, and that very, very shortly that ratification will come.
Okay, thank you, Greg. I hope that answers your question. Greg, on that note, it's not our Telegram group, it's a shareholders Telegram group. I'll ask Nick, who's part of the communications team, to post a reference to that into the company's Twitter account. And you'll be able to get a link from there. Fred, I don't have it to hand. It was set up by some of the shareholders directly. Right. And so, Steve, if everything... Let's if we brought in a partner by year end or early next year, give us a broad brush what we would do through in terms of DFS, FID, production, and the timeline to selling the first production.
Well, the first thing that's needed is 12 months of environmental baseline. We then do, in parallel, this year work on the processing side. We want to bring in the strategic partner by the end of the year, and it's only then with a strategic partner that we will choose the consultant for the DFS and then get on with that. That's probably going to be 9 months or so for the DFS. We've got the financing package to put together, 2 years of construction. So the realistic time frame, also with the environmental permitting within Chile, we're looking at first production early 2031. If we can bring it in earlier, the government has said that it really wants to accelerate the permitting process. So if you can go faster, it'll be good. But in all the documentation we're putting in now is being conservative, early 2031.
Okay. Now, some people said, asked the question, if a group came up and offered to buy out the assets, I mean, I know what the major shareholders' position are, but some people are saying, how are we going to hang on to 50%, Steve? What if somebody made an offer to buy out the asset? Do you want to sort of comment on that, just because it's sort of a repeated one that comes up in various of the forums?
Yeah, no. Clearly, we're duty bound, as a board, to put offers through to our shareholders. But we're very clear. We've got two major shareholders in Regal and Athos, who hold like 42% between them. They clearly have a blocking vote on anything. So any proposal to buy an asset or the company will need their approval. And they've already made very, very clear where they expect the share price to go to once we are in production. We've made clear to potential strategic partners we want to stay in control of Laguna Verde, but it may be that there's such an attractive offer comes for 51% of Laguna Verde, that the board may decide to accept that and channel those funds into the development of Viento Andino and other projects. So we are flexible. We want to stay in control. We're expecting a strategic partner in the 10, 20, 25% range. But realistically, we also have to listen to what other strategic partners want to do as well.
Yeah. I mean, I think the major shareholders are definitely looking at a 3 to sort of 4 year horizon. They are fundamentally bullish on lithium, and they're fundamentally bullish on the assets. But I think the thing to point out as well to current and potential shareholders is Ignacio's had a long and very sort of senior career in the lithium space in Chile, and there are a number of other projects in Chile that the company's constantly being sort of proposed, potential to look at. I know, I've sent you a number of things where people have reached out to me and said, oh, we have a further asset. So if you have an opportunity and it made sense and it was at the right price, and the right price being many, many multiples higher than where we are today, from my potential broker, I could see a scenario where it might make sense to take cash off the table on Laguna Verde and then channel that into another asset or pick up further assets. But again, this is all speculation. The focus for the moment is to run through the fairly onerous process on ASX. It's not onerous from a technical point of view. It's just time consuming, and there is a series of events that need to happen in order, and reviews by different parties. One of the things in AIM obviously is that the Nomad reviews and supports it. In Australia, you do have to go to ASIC, and then you have to go to the Australian Stock Exchange, and they have periods to review and comment. So it's a little bit of a slower process than you tend to do in London. And then Ignacio's time, I know, is very much focused on the strategic partner. So I'd like to thank everybody who came in and supported on the retail round. We'd like to thank everybody that's continued to remain to be a shareholder, whether they supported in the round or not. It has been less than we'd hoped. I know a number of shareholders are disappointed in where the share price are. We discuss that quite regularly between myself and the board and Ignacio. It's not that we are. I get certain comments, and I know Steve does as well. But we are limited on what marketing we can do when you're going into a closed period around the finances. We're limited on what market we can do if we know that we're going to be doing a financing. But the company is now fully funded to meet its objectives, at least for the next 12 months, bar a small raise onto the ASX. And I really hope that from here we can help to rebuild some confidence, attract new investors, and to help drive the share price up to what we think is reasonable representation of fair value. Steve, is there anything else that you'd like to round up on?
No, I just again like to thank our institutional and our retail who've demonstrated that they believe in the project by coming in on this round two. We've now got the funds that we can continue to work as expeditiously as possible to advance the project and create more value and get that share price moving upwards.
Okay, well, what we'll probably do, guys, is we'll Steve, well, thank you for that. And I know that once Ignacio gets back and we've done fast markets, we'll probably in about sort of 6 weeks' time just do a general update. I mean, Ignacio's not going to be able to go into any detail, but he can certainly express his thoughts on the sort of questions and proposal how we've been doing and how the fast markets was. So we'll maybe just do a generic update on where the lithium price is and how we've been progressing. But again, just to preempt, we'll be limited on what we can and cannot say while these negotiations are going on. But as always, Steve, thank you very much for your time. I know a number of people appreciate it. It's good to be able to update with everybody, and we'll catch up very soon.
That's great, Daniel, Steve. Thank you very much indeed for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback, which will help the company better understand your views and expectations. On behalf of the management team, we would like to thank you for attending today's presentation, and good morning.